Hi, thanks for tuning in. This is the US Futures Weekly Chart Analysis for the week ending 12th of January 2024. First chart is the US Dollar Index Futures, and you can see that the market has traded adjacent to the previous close all week, like that. And price appears to have come to an equilibrium this week and traded either side of the previous close with a very narrow spread. In old-fashioned Wyckoff terms, this might be called a hinge, where price contracts very severely around the previous close, and it suggests that from here a greater swing may occur. It doesn't, however, suggest in which direction that swing may occur. Now, often when prices contract like this really seriously, there is an expansion in range in response. So I would suggest you pay close attention to this market in the next week or so. The previous bar did close well off its lows, so that suggests there was strength in the market at that point in time. If you put the lines in, you can see that the market was actually right at resistance there, and it was actually stalling out at that level. So I'm not sure whether that'll play a part in the analysis. We'll see in the future. This is where the market could not get above these lows when they formed. There was a breakdown here. That was the breakdown bar. Price attempted to find support here, wasn't able to recover, pushed lower, and now it's found a little support adjacent to this level here, the previous lows. Here was the support coming in here. Price has pushed up and it's found an equilibrium this week, and that suggests that we're right at a point where the market is going to either bust through and accelerate higher, or it's going to break down, test these lows again, and you've got the lows of the range coming through there. So we're at a pretty important juncture right here. Let's look at some of the other charts now and see if we get some hints on what they expect is going to happen. E-mini S&P. This is S&P 500 Index Futures. The range here is where I anticipate the bulk of the supply from the previous highs sits. It's not actually the previous highs. They do pop up just a little bit higher like this, but they were fluffy highs where there was, I'll show you. Here's the previous highs, and you can see this is where the previous highs were made. Here, if you come down, this is the volume. Here, on that high, there was nothing there. It was the lowest volume for weeks and weeks and weeks. These are fluffy highs. There's nothing there. Well, there's very little there. This is where the bulk of the supply was sitting. You can see price broke down on this bar, attempted to recover but was unable to. There was not enough strength to recover, and price continued lower. So the range that I've got marked is where I anticipate the bulk of the supply was sitting on the chart. So now we're back where we were. You can see how price negotiated that level. It pushed up to it, busted in, had a period of absorption, accelerated higher, then gapped out the top here, pushed up. Then you had Christmas and New Year when the market was trading with very low volumes. Prices come back, tested right at the highs of the level, and this week it's responded positively to it, and it's sitting right up at the highs of the range now, in a good position to continue higher if trading conditions remain favourable. So that's where we are at the moment on that chart. US Treasury 10-year note futures, you can see, have been trading really nicely more recently, pushing up, coming back and testing for supply each time. However, this time it pushed up, and here was the level it pushed up to. You've got this congestion to the left here to negotiate, and price really saw volumes reduce at that level. There was no serious attempt to push higher. This was a half-hearted attempt with perhaps a little over-enthusiasm from the market after the previous good strong rise was in place. Price then did pull back in the same fashion as these bars, and this week has recovered, but only back to the highs of the range being marked by this high, where there was actually decent volume still here. So we've got a recovery of sorts. Price did trade as an inside bar this week, so it hasn't pushed above the important level, which is there, or the lows of the range, which is there. So price traded inside that range. Volume was a little high. You normally see volume reduced on an inside bar like that because all the trading was usually done on the previous bar. But that doesn't seem to be the case here. There may have been some buying support come in, but if so, it didn't push above the important level, which is that juncture right there. So we'll say the jury's out there at the moment, and we'll just watch and see what the result is next week. Probably early next week, you'll get a good indication of what's going to happen. Seeing volume was a little high, I would suggest you'll get a test for supply early in the week, and then you'll get the response that'll tell us whether the market really is strong, which would suggest that the US dollar index futures will go lower, or if this is actually weaker, and that would suggest the US dollar index futures may attempt to go higher. So we're at an interesting junction there as well. Copper price futures pulled back this week, but volume was very high, which suggests that buying support entered the market. Here's the lows of the overall range. There was some accumulation in here. You've got the next level coming through there, and then the highs of the range up here, like that. And you can see the market has been in consolidation mode through here. In fact, this whole area here is a period of consolidation to some extent. This week's bar spread narrowed considerably, but volume increased considerably to above average. Buying support must have come in here. If this was all selling, all this volume, this would have been a widespread down bar. But it wasn't. It was a narrow spread or reduced spread down bar. That suggests that buying support has come in adjacent to this previous congestion here, where the market found support previously and pushed back up to this level. So I'm expecting that the market will either go sideways to up here in response. If the market is now strong and the buyers here represent strength, you'll see an up bar in response. If there's a period of accumulation and consolidation required, you'll see the market go sideways. I don't anticipate you'll see a serious down bar in response. If you do, it suggests that what buying did occur on this bar had been dumped, and then you'll get a widespread down bar. So if they dump the buying on this bar, you'll get something like this in response, which would suggest that this volume here has been dumped. I don't expect that's going to happen. I expect you may get a little test for supply, or you may get an up bar in response like that. Gold price futures. Gold price futures saw buying support come into this market this week. You've got the lows of the range through here and a nice clean 3-bar reversal there, or shakeout. Price pushed up in response to that shakeout. It came back after a couple of weeks and tested the highs through here. Accelerated higher again. I'm becoming more and more convinced that this week's trading was actually a couple of days that caused all that violence, was designed to remove supply from the market and challenge anyone who was considering selling or held a position, because there was no serious downside follow through in response. You got a little test for supply and then an up bar, and prices traded within that range since. Price dipped lower this week, but it recovered nicely on a serious increase in volume, which was later in the week. And if the market responds as expected, you'll see the price push up higher in response. It's a nice, clean looking chart, that one. Makes good sense. And then you oppose it to this chart, which I expect has a lot of retail involvement in it, and it's nowhere near as clean or clear. Gold is up at this level here, and it pushed above. Here was that violet bar, and gold is actually trading in this level here, but this market has dipped well below. There's always exaggerated moves in this market, and price has pulled back pretty much adjacent to this congestion to the left. You've got the lows of this bar here to contend with, and you can see that buying support came in off those lows, and that's pretty much just where prices traded this week, within that range. I would suggest that this market is just being dragged around by gold to some extent, except the moves are a little more exaggerated in this market. So if gold goes up in response next week, which is a reasonable chance, this market will do so as well. Otherwise, it's more likely just to go sideways in response. Like crude price futures have been a little more difficult to read recently. It does look like there's a stronger attempt to consolidate at the moment, adjacent to this period of trading to the left here. Consolidation took part in the background here. You can see that the market had a good strong response to that and pushed higher up to the highs of the range, which I don't have marked anymore, but they come through pretty much through there. The market is consolidating nicely adjacent to this previous consolidation in the past, and it looks stable at the moment. I don't feel confident in this market. It's been a little less trustworthy more recently, but that being said, volume increased to above average this week. The market pulled back and recovered and closed well off the week's lows, which suggests that buying support has come in. I would expect the market to continue trading within this range for the time being, unless there's some reason emerged for price to accelerate out. So we'll see how that goes. But at this point in time, the market looks comfortable consolidating sideways pretty much between 70 and 75. There is some support below that level if required, but 70 to 75 seems like the right level for the market to trade in at this point in time. This is the Euro US dollar currency futures, and this market's been trading fairly clearly as well. You had the adjacent lows here, and this is where the new lows were established. Price accelerated out, came back and tested for supply, accelerated out a second time. There's a little shelf in here, which you can see. Price respected it and then broke down. You carry that shelf across. You can see price pushed up to it, pulled back, tested the next level lower for strength. Price pushed out a second time. Found a little bit of a lack of demand here, not necessarily supply, because if you look down here, volume was really quite low, and then prices come back in response, and it's trading right at this level. It found support as price dipped below, and this week price has, similar to the US dollar index futures to some extent, traded in an equilibrium around the previous close. It's closed slightly higher this week, so perhaps that suggests this market attempting to go higher. I'm not convinced of that really, looking at the chart itself, but you could interpret it that way. I'd rather say the jury's out, and we'll just see. It is a hinge to some extent similar to the US dollar index futures, which this trades the inverse of that, so you would expect something like that to be the case. We'll see what the British pound looks like and if there's any hints in that chart. This is the British pound currency futures. And similar to the euro, you've got the lows that were established through here. Prices pushed out there. Deeper test for supply than the euro, but price still responded positively. You've got the little shelf in a similar fashion like that through here, where the market did respect it, but then broke down on this bar and continued lower, was unable to recover here. Price pushes up to that level, it's come back, and the market's then responded and is trading pretty much adjacent to this level this week. This market tested for supply the previous week and responded more positively this week, and it doesn't have a hinge formed. So this market looks way more likely to move higher in response. And that might suggest that the euro will also move higher, and that would suggest that the US dollar index futures will go lower. So there's a little hint there to watch next week and see how that responds. Aussie dollar currency futures made a complex low down here. Price pushed out in response. Very deep and awkward looking test, but it still responded positively, and the market accelerated out. Price came back and tested the breakout, and you can see that the previous week buying support came in here off the lows, and this week you've had this week just trading back within the range of the previous bar's buying support. So that's like a little consolidation at that level, and you would expect this market will attempt to push higher in response. We'll just see if there's enough strength in the market to do so. You've probably got the highs of the range coming through there at the moment, just above 68 cents. Bitcoin futures. Bitcoin futures saw pretty serious supply drawn out this week by the looks, right at the highs of the range. Now, just to draw it in so you can see where we've been quickly, I expect this is a period of consolidation and accumulation in the background. Price has broken out, tested it, and it sat in a range above the breakout line for a period of time before it accelerated higher. Now, as it moved into this zone where I anticipate that there was supply to the left, price originally moved into it in a grinding fashion, in an absorption fashion, before gapping higher here, pushing up to the highs of the range, going through a period of consolidation like that in here. The market last week attempted to push higher but did draw out some supply off the highs. The market still attempted to move higher this week, and it was thrust lower, forced lower by a heap of selling pressure by the looks. So where to from here? Initially, I would expect the market will attempt to consolidate and test for supply. So you'll see the market push lower and then attempt to recover. And then we'll see just how strong the market is or whether the supply is overwhelming. If the market pushes below these lows here, like that, then your next level is here, adjacent to where this period of consolidation and absorption was taking place. So that's your next level lower if the market can't find support above these levels, above 40,000. So you might say 40,000 is your key level in the near term. If that can't be held, then the market's going to come back into this zone here and attempt to find support there. The levels below that are pretty much where we've got the market lines already. You would see price come back and test this level for strength here. If that can't be held, you're down here. So 40,000 initially, and just see where the supply stops. If the supply is ongoing, you'll see price pull back to about 36,000 and test that for strength. and then we'll just see how the market responds each time. At some point, you'll normally find the supply will ease and then the recovery can take place. You may also find this market is actually showing underlying strength overall, and what supply has been drawn out on this bar here will be absorbed pretty quickly. The market will just test for supply, recover, and probably go sideways for a period and challenge any further selling in the market to emerge and come out and be absorbed by the buyers. So pretty important little level now. You've had supply drawn out. The volume being fairly high suggests that there was quite a bit of supply drawn out. Whether this was profit taking or supply from the left or short selling, it doesn't really matter. It's just selling pressure. It's supply. And you'll just have to see whether that supply is persistent and ongoing, or whether that supply is weak, it's short term, and is quickly absorbed by the buyers, and the market recovers and then pushes higher. But no matter how you spell it, it's an interesting level now. We have to see how the market responds. And you have no hint at the moment on how that response will take place. All you've seen is the initial supply emerge. You'll have to wait and see what the market does in response. Okay, just quickly back to the US dollar index futures. As I mentioned earlier, you've had a hinge form or a contraction in the range, and a contraction often sees an expansion in response. So very important little equilibrium has been found adjacent to the previous bar's close, and this is leaving the market in a really important level. You can see the market had moved up after finding some support to this level. This is a breakdown line in the past, but wasn't able to recover. And it's hard to know whether the market has been absorbing supply last week in an attempt to push higher in response, or if supply has stopped the market from recovering and will be ongoing and push the market lower in response. Really important little juncture. It's unclear as to the direction in the immediate near term, but it's going to play an important part in all these associated charts and markets. So really interesting. You'll probably get some sort of guide in the first couple of days next week. All right. Thanks for your time. We'll do it all again next week and see what actually happened in response. Thank you. See ya.